Hello dear traders, I'm Anna Kasatkina. Welcome back to Insta TV, and let's take another look at the most important financial events for today. Oil prices retreated overnight after a weekly update on U.S. oil inventories from the Energy Information Administration. According to the government data, the U.S. crude stock surged 5.274 million barrels last week from a 2.432 million barrels increase previously. Analysts had expected weaker growth of 1.48 million barrels. The revised figure influenced trading sentiment, and as a result, oil prices are gaining ground. Today, Brent crude benchmark rate is trading at $47.27 a barrel after having hit an intraday high at $46.50. West Texas Intermediate settled up at $46.04 a barrel. Interestingly enough, oil traders rushed to open long positions in light of comments by Venezuela's President Nicolas Maduro. Following the meeting with OPEC General Secretary Mohammad Barkindo in Caracas, Nicolas Maduro stated that the cartel countries are ready to reach a forceful deal on cutting oil output. Energy investors cheered the comments as they are alert to the OPEC summit slated for November 30th in Vienna. Russia is widely expected to join the agreement of the largest oil producers, as the non-OPEC oil giant has stated its intention to participate in production cuts. Meanwhile, the Russian currency is again showing resilience to the U.S. rival following moves in the oil market. Having reached an intraday high at 65 points, the ruble strengthened to 64.36 versus the US dollar. The pair is trading under pressure because of the temporary weakness of the US dollar index. Yesterday, traders were discouraged by the US Producer Price Index, a leading inflation indicator which showed a decline. Rival currencies are taking advantage of the US dollar's temporary weakness. The Canadian dollar is no exception. The loonie is advancing for several reasons. To begin with, being the commodity currency, it is following the oil dynamic. Besides, US tepid macroeconomic statistics does not undermine confidence in the rate hike by the Federal Reserve, but casts a shadow on trading sentiment. The main reason behind the loonie's advance against the US dollar is Donald Trump's victory in the US presidential election, as the Republican president aims to reboot trade relations with Canada. Currency strategists foresee a decline of the US dollar versus the Canadian dollar pair in the short term. Experts recommend going long on the US dollar versus the Canadian dollar pair, as the US dollar could tighten its grip against rival currencies in the late session in case of strong CPI report. This was Daily Financial News on Insta TV. Thank you and goodbye.